By the end of this video, I'm going to show you exactly how I used liquidity sweeps to take over $45,000 in payouts last month. We're going to go over all the types of liquidity and how to use them in your trade. So let's get into it. Okay, so starting off, there's three things that we need to know. It's basically the three biggest draws on liquidity, or the three most important, maybe not the biggest, but the most important draws on liquidity. And the first one that we have is relative equals. Relative equals is basically what it says, or what it sounds like. You have relative equal highs or relative equal lows. It's when multiple candles, either they're wicks or, you know, if one of them has a wick and one of them doesn't have a wick, if they're lined up relatively equal, that's going to be an extremely strong draw on liquidity, because think about it. How many people are going to have their stops right at that relative equal? That is going to be a key place that the market is going to want to move to try to stop a bunch of people out of their positions. The second draw that we're going to have is the session highs and lows, which can also just be swing highs and swing lows. Now, the session highs and session lows are going to be stronger draws than just internal swings, because they're the external draw of the range that we're in. So this could potentially be London high, and this could potentially be London low. And then we have Asia session, London session, and New York session. Each one of those, the highs and the lows that are untapped, serve as good draws on liquidity. And the last draw that we're going to have is the low resistance liquidity run. Now, this is basically when, say you have like a slow grind up or a slow grind down, and you see a lot of wicks on the candles. If it's going up on the bottom side, if it's going down on the top side of it, that is the market engineering liquidity. And that is when that liquidity gets ran, it's going to be an aggressive, quick flush. I'm going to go over some examples of that. And I'm also going to go over examples of all three of these draws on liquidity and how to use them when taking reversal plays, or how to use them when taking continuation plays. So we come to the chart, and we're on the 5-minute chart right now, and you see, what do I have marked out? I have marked out relative equals. Now this is relative equals in these two candles, but it's also rough relative equals with these two. So how can we use these candles as a draw on liquidity? Well, you see, we had this massive dump for some reason, whatever day this is. What day are we on? We're on December 3rd. We had a massive dump the previous day, but we have pumped all the way through it overnight. And once this 1 hour or this massive gap gets inversed right here, then what can we start looking for? If we're pumping up, this draw to me, or the market's narrative to me, is we want to come take out these relative equal highs after almost sweeping these lows. Now, there could be a SMT on ES, I'm not sure. On the 5-minute time frame, let's see what happens if we go forwards a little bit. Once we've inversed, let me go back. Once we've inversed this gap, this can be used as a strong draw on liquidity. So as you see, we have this 5-minute gap put in after inversing this 5 minutes. See, the key thing is here, this gap gets inversed. So once this imbalance gets inversed, then you can start looking for plays to the relative equals, which can serve as draws on liquidity. And it's even a plus if the draw on liquidity is also a session high or a session low. So we also have the Asia session high here and the London high here, that technically already got swept a little bit, but can still use it as rough relative equals. And then we're getting a 5-minute gap that gets retested, and you come down to the 1-minute gap, and what's happening? Well, we come down to the 1-minute chart, we're putting in this 1-minute gap right here. And yes, we are in premium right now. We're in premium of the range, but if I'm taking a continuation trade, and in my head, I've said, okay, wait, this is the narrative of the market. You know, I was bearish maybe coming into the day, but what's happened? We've rebalanced almost this entire move. We have extremely clear relative equals that are also session highs right above us. We can start looking for a continuation trade. So once we put in that 5-minute right there, I can then start looking for the inversion of the 1-minute gap out of the 5-minute gap. And once we get that inversion, we know that we have these relative equals right here as the clear draw. We can get long, placing our stop at the swing low, and then let's see what happens. I haven't back tested this day. I just looked, so hopefully this hits TP. Almost there, boys. Almost there. Okay, boom. Full TP hit. You know, it's really that simple. And now let's see what happens. You know, we took out those relative equals that are also session highs. Is this a manipulation to start moving lower? Because you can use this as a liquidity sweep. You know, we love liquidity sweeps, love reversal plays. Those are some of my favorite plays to take. I do love the continuation play, but the inverse fair value, or the liquidity sweep inverse fair value gap is also a huge part of our arsenal for plays that we take. So let's look at these charts. We've swept this liquidity now. We've come pretty decent amount past it. What's this? 9-10 points. That's ideal for a liquidity sweep. In a 1 minute close, above the gap or above the draw on liquidity is also ideal. I will still take it if it only wicks through and we get a clean reversal play. But ideally, I'd like to see at least some kind of candle closure above it. For me to start looking for a reversal play here, I'd want to see this 2 minute gap right here get, because we have all this liquidity to the downside. Now look what happens right here. This is something important that we need to be looking at. We have inverse this 2 minute, and this actually, I didn't even plan this, but look what we have right here. This was one of our other draws on liquidity. Low resistance. Look at all these wicks. Look at the market engineering this liquidity that can easily be ran. How many people are going to have their stops at these swing lows? When the market wants to take low resistance liquidity like this, it's going to flush with speed. So we finally get this 2 minute inversion, and you might say, oh, but look at all that buying pressure on the 1 minute candle. Why would we enter short off this? Well, I'll tell you why we would enter short off this is because when there's low resistance liquidity like this liquidity is going to be ran. It's not gonna run half of this liquidity and then just reverse up unless there's an SMT, and obviously it takes the liquidity on ES. But with this 2 minute inversion, unless this wick came down to this low right here, the lowest low in this low resistance liquidity, the play is still valid. So I would be willing to enter short here, small risk. Let's go here. We'll go, how many points is this? We'll target a little over 1-to-1, a little 1.5 play. And let's see what would happen on this candle. Go, 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 go. Boom, full TP hit. You know, I love it. Yeah, I didn't even plan this, but what do we have? We have the liquidity sweep of the relative equals highs, which were obviously going to be the draws on liquidity off this pump. That's the narrative that the markets want to making, because we also have the Asia high right here paired with the pre-market high, and the London is a little lower, but you can call it rough relative equals. So once we sweep that, we came down, we got bought back up a little bit, but we failed to move higher. Once we failed to move higher, then I'm saying, okay, wait. Okay, look, this is bearish. Now let's talk about session highs and session lows. Coming into every single day, the first thing that I'm going to want to do is I'm going to mark out my session highs and my session lows. So what do we have? We have the London low right here. We have London high right here. We have Asia low right here. And then Asia high would have already get tapped, because if Asia high is right here and then we continue through it up into London session, then that liquidity pool is no longer valid. When you have these session highs and session lows like this, if they get ran in the subsequent session, it is no longer valid. So if this low, say this Asia low got put in right here, and during London, we came up and then dumped down right here and then came back up, you wouldn't keep Asia low there as a level. It would be swept during London, and then the new level you would mark would be that London low. So when I'm coming into a day like this where we're just kind of ranging, I'm looking for a manipulation. The ideal setup is a manipulation into one of these lows, and then can target the next draw as, or the next external draw, the next high or low, depending on what it is, what kind of play you're taking, as my full target. So on market open, we actually are manipulating into this London high right here. And what are we also doing? We're putting in this gap. So once we manipulate into this London high, if we get some strong displacement down through this gap, we have a ton of liquidity lower, because look, we also have all these lows right here, these kind of internal swing lows that you can use as lower draws in liquidity, which can just be added confluence if you're taking a reversal play like this, targeting the next external draw. So let's see, price moves above it. Okay, we are kind of pumping though. Ideally, when I want to see a sweep, I want to see a sweep at a level by like 10, 20 points, not 100 points break above. So we're just going to let price play out. We're kind of chopping around here. We are getting some displacement now. We have the 5 minute actually does get inversed on this candle. The 1 minute gets inversed on this one. So I would be okay with taking this play off this inversion, because we are also sweeping into this massive 30-minute PD array. We fill the gap to the tick. We have this accumulation, we manipulate, take out London high, completely fill this 30-minute fair value gap, and now we're starting to displace lower aggressively. So once that London high is taken out and we're starting to displace lower, we've taken out buy side liquidity. I can now enter short. I can go BE at these lows and then target this next external draw. And honestly, 5 minutes, I'd like to have my stop above here. I'd like to have a pretty big stop on this. So it'd be about a 1-to-2 almost ratio. And let's click play out, see if our play would have hit. We would have gone BE at this point. So we'll price. Nice. Full TP hit. The external low gets hit. We've accumulated, manipulated, and distributed lower. It's perfect. And then look, wait a second. We took out that London low. Now let's see what the market wants to do. Oh, we're displacing higher. Wait a second. We're displacing higher. Okay. We finally have the first presented gap on the leg down inverse. I don't think I would enter this right now just because at this point, that's a 200-point move with a little bit of a retracement right here, but I would have wanted to see a more aggressive retracement. So once we swept that, now I'd be looking for some 5-minute gaps or 15-minute gaps. Check on the 15-minute. We have a massive 15-minute right here that could be tapped for retracement long because I would feel comfortable taking continuation long here because we have taken out that sell side liquidity. Let's see if we even get the retrace. I probably wouldn't take this continuation long. Yeah, I wouldn't take this just because we're in so much premium right now after the 200-point move. All right, looks like the price is going to chop here. But as you see, that's a pretty clear demonstration on how we can use the session highs and session lows. And as you saw on the last one, that low resistance liquidity got ran aggressively. When you have low resistance liquidity built up like that, it is going to get ran aggressively. So hopefully this video helped you out on how to use draws and liquidities for reversal plays and continuation plays is using them as clear draws on liquidity that you can take continuations for targeting at. And if you guys do want to learn more, we do have a Discord where we live trade every single day. We teach our strategy. We have a great community of people. The link is in the description to join. And if you learned something, make sure to like, comment, and subscribe, and I'll see you guys in the next one. Peace.